Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover the hidden truths behind those massive corporate reports. Today, we're diving into a filing from Vanguard Horizon Funds, and let's just say things got a little international in this one. This report is all about the Vanguard International Core Stock Fund, and it covers their performance from the 1st of October 2024 to the 30th of September 2025. Think of it as a year-end review for this particular investment fund. We'll be looking at how it performed, what it cost investors, and where all that money is actually invested. And for those of you who love the nitty-gritty, we'll also touch on some of the behind-the-scenes stuff like auditor fees and how decisions are made. So buckle up because we're about to decode what this Vanguard International Core Stock Fund has been up to. Alright, let's get straight into it. This is the Vanguard International Core Stock Fund, and it comes in two flavors, investor shares and admiral shares. The report covers the period from late 2024 through September 2025. First up, let's talk about costs, because even with investments, someone's got to pay the bills. For a hypothetical $10,000 investment in the investor shares, the cost for the year came out to a tidy $52, which works out to 0.47% of that investment. For the admiral shares, which are often for larger investments and have lower fees, it was $42 or 0.38%. So for every 10 grand you had in there, you were looking at spending less than $50 on fees in a year. That is pretty competitive, especially for an international fund. Now for the performance, and this is where things get interesting, for the 12 months ending the 30th of September 2025, the fund actually did better than its benchmark, which is like its official yardstick. The report mentions that optimism about deregulation and tax cuts in the US was somewhat balanced by worries in interest rates and trade policies. They also note that global central banks like the European Central Bank and the Bank of England were cutting rates during this period, while the Federal Reserve held steady. Geographically, the fund's success came from picking the right stocks, especially in Europe and the Pacific. Emerging markets, however, didn't perform quite as well as the benchmark. Sectors like industrials, materials, and financials were winners thanks to smart stock picking. But they noted that the fund's choices in healthcare, real estate, and consumer discretionary areas lagged behind the index a bit. Looking at the longer term, since its inception in October 2019, the investor shares have delivered an average annual return of 11.32%. The benchmark, the MSCI All Country World Index ex-USA, returned 8.81% in the same period. That's a pretty significant difference over 5 years. For the admiral shares, the returns are very similar. A touch higher at 11.43% annually since inception compared to the benchmark's 8.81%. Remember, past performance is never a guarantee of future results, but it's a good indicator. Let's zoom in on some key numbers for the fund as of the 30th of September 2025. The total net assets, meaning the total value of everything the fund holds minus any liabilities, was a hefty $586 million, or over $5.5 billion. That is a lot of money. The fund held 97 different investments. This suggests a reasonably diversified portfolio, not putting all its eggs in a few baskets. The portfolio turnover rate was 87%. This means that within the year, about 87% of the fund's holdings were bought or sold. A higher turnover rate can sometimes mean more trading costs, but it can also indicate active management trying to capitalize on market opportunities. And for those advisory fees, a total of $6,730,000, or about $6.7 million, was paid in investment advisory fees. When you spread this across over $5.5 billion in assets, it emphasizes how efficient the fund is. Now, let's talk about where the money is actually invested. As of the 30th of September 2025, the biggest chunk, 45.2%, was invested in Asia. Europe came in second at 40.2%. North America made up 8.4%, Oceania 1.5%, South America 2.4%. And then there is a smaller other category at 1.1% and a bit of net other assets. This confirms it is truly an international fund with a heavy emphasis on Asian and European markets. Diving deeper into Asia, we see significant holdings in China with companies like Tencent Holdings and Alibaba Group. Japan is another major holding with investments in Sony Group and Mitsubishi Electric. South Korea is represented by Samsung Electronics and SK Hynix. In Europe, Germany features prominently with SAP-C and E.ON-C. France has Ligren-C and Engie-C. The United Kingdom is a significant part of the portfolio with holdings like Shell plc, Tesco plc, and AstraZeneca plc. Overall, 97.8% of the fund's net assets were in common stocks. This shows a clear focus on equity investments for growth. The schedule of investments really gives you the granular detail. For example, in Australia, they held Stockland and Arns Group Holdings. In Belgium, KBC Group, NV, and Argenx A Brazil includes Ambev, ASAR, and CIA de Saneamento. Basico do Estado de São Paulo Sabas. Canada has Barrick Mining Corp and Royal Bank of Canada, among others. It is a vast global spread. The United Kingdom is a substantial portion of the portfolio, making up 13.2% of net assets. Major holdings include Shell plc, Tesco plc, and AstraZeneca plc. Taiwan is highlighted with a significant holding in Taiwan Semiconductor Manufacturing Company Limited, with over 5.8 million shares valued at over $252 million. This is a critical company for the global tech industry. Now, let's touch on some of the governance and reporting aspects. This section is the auditor's report. PricewaterhouseCoopers LLP or PwC has audited the financial statements. They give a clean opinion, meaning they believe the financial statements are presented fairly and accurately. In accordance with US generally accepted accounting principles, they've been auditing Vanguard funds since way back in 1975, which shows a long-standing relationship. For audit fees, the cost in 2025 was $161,000, down from $180,000 in 2024. Importantly, there were no fees for audit-related services, tax fees, or other fees paid to the auditor for services directly to the fund itself. This signifies a clear separation of audit and advisory services for the fund. However, when you look at non-audit fees paid to PwC by the broader Vanguard complex, including other funds and Vanguard's own entities, the numbers are much larger. For 2025, these non-audit fees, which include audit-related tax and other services, totaled over $5.6 million. This shows that while the fund itself had minimal direct fees beyond the audit, the larger Vanguard organization utilizes PwC for a range of services. Next up, a look at how the investment advisory contract with Wellington Management LLP was renewed. A majority of independent trustees reviewed Wellington Management's services, performance, and the overall cost. They considered the firm's long history, its multifaceted investment approach drawing from various research teams, and importantly, the fund's performance relative to its peers and benchmark. The board concluded that the fund's performance since its inception in 2019 was satisfactory, justifying the continuation of the advisory arrangement. They also found that the fund's expense ratio was below average for its peer group, and the advisory fee rate was also below the peer group average. This is a crucial point for investors as lower costs generally translate to better net returns. Furthermore, the board noted that the fund's shareholders benefit from economies of scale thanks to breakpoints in the advisory fee schedule. This means that as the fund grows larger, the fee rate actually decreases, which is a win for investors as the fund's assets increase. Looking at the statement of operations for the year ended the 30th of September 2025, we see the fund generated $101,446,000 in total income. Expenses were $13,304,000, leading to net investment income of $88,142,000. The fund also saw a net realized gain of $189,368,000 from selling investments. And importantly, there was a significant change in unrealized appreciation, meaning the value of investments that haven't been sold yet of $626,690,000. This shows the portfolio has grown in value. All this added up to a net increase in net assets from operations of $904,200,000. That big number really reflects a strong year for the fund. The statement of changes in net assets tells a similar positive story. For the year ended the 30th of September 2025, the fund saw a net increase from operations of $904,200,000. Distributions to shareholders totaled $52,110,000. But significantly, there was a net increase from capital share transactions, meaning more money came in from investors buying shares than went out from investors selling shares of nearly $2.8 billion. This massive inflow of cash boosted the total increase in net assets for the year to over $3.6 billion. For investor shares, the net assets at the end of the period were $1,915,160,000, with a net asset value per S-share of $16.66. The Admiral shares saw much larger net assets at $3,670,514,000, with a net asset value per S-share of $33.35. This difference in net asset value per S-share reflects the different share classes and their historical performance and fee structures. Looking at the 5-year financial highlights for investor shares, the total return for the year ended the 30th of September 2025 was 22.39%. This is a very strong performance, especially when compared to the previous year's 27.08%. The 5-year cumulative return is 11.32%. The ratio of total expenses to average net assets for investor shares was 0.47% for 2025, which is consistent with previous years and aligns with the cost information we saw earlier. For Admiral shares, the total return for the year ended the 30th of September 2025 was 22.50%, very close to the investor shares. The 5-year cumulative return is 11.43%. The expense ratio for Admiral shares was 0.38%. Also lining up with our earlier observations and showing the cost advantage of this share class. Digging into the tax details, the fund had a net unrealized gain of $950,079,000. This is the potential profit from investments that are still held by the fund. A really interesting disclosure here is that a single shareholder, the Vanguard Star Fund, owned 27% of this fund's net assets on the 30th of September 2025. This is a significant concentration. The report warns that if this large shareholder were to redeem their investment, it could increase the fund's expense ratio, lead to higher transaction costs, or even trigger taxable capital gains for other shareholders. This is a key risk factor to keep an eye on. Finally, on a more procedural note, the company stated that its disclosure controls and procedures are effective. This means they have good systems in place to ensure information reported to the CAC is accurate. Similarly, there were no significant changes in their internal controls over financial reporting during this period. So, what is the takeaway? This Vanguard International Core Stock Fund had a very strong year in 2025, outperforming its benchmark and bringing in a substantial amount of new investor money. Its costs are low, which is always a good sign for investors. The portfolio is heavily weighted towards Asia and Europe, and its holdings are diverse with a heavy emphasis on stocks. A notable risk exists due to the large concentration of assets held by a single shareholder, the Vanguard Star Fund, which could introduce volatility if that shareholder were to divest. However, the fund's overall management and performance, as reviewed by the board, seems solid. They've renewed their contract with Wellington Management, who have a proven track record with this fund. Alright, that is our breakdown of Vanguard International Core Stock Fund's latest report. What is your take on these numbers and what they signal for the company's future? Do you think the large shareholder concentration is a major concern? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into corporate finance. Don't forget to check out the Discord server linked in the description below for more discussions and insights. Thanks for watching. See you next time.